Holiday shopping season is here. With Black Friday just around the corner, a new forecast from the National Retail Federation, known in your hood as the NRF. They predict holiday spending is expected to slow, the most in 5 years, only growing between 3 to 4% from last year, as higher prices squeeze consumers' wallets. For more on the state of retail, we're joined by Stephen Yalof, who is the Tanger Outlet CEO. Great to have you on with us as always and get some of what you're seeing from your outlet centers and how you're operating, even the real estate presence that Tanger Outlets has. First and foremost, when you think about the shopping experience that consumers have come to expect, what type of outsized volume or even foot traffic do you typically see holiday seasons, and how does that compare perhaps year over year?
Well, first of all, thanks for having me back on the show. I appreciate you giving me the opportunity to give you our perspective on retail in the holiday shopping season. So, first of all, I'm speaking to you live today from Nashville, Tennessee, where about 2 weeks ago we opened up our 37th factory outlet property here, and we walked the property all afternoon yesterday, and there's tremendous traffic here, and part of it is the newness of the shopping center in the marketplace, but really what the customers is looking for when they shop in one of our shopping centers, and I spoke to many of them yesterday, is the everyday value pricing. And I think that really speaks to where the consumer is currently, and heading into a holiday shopping season, they are looking for the best possible price on the brands they love, and they can get them in our shopping environments.
So, Stephen, are you going to be able to weather any sort of downturn then if we do see further weakness in the economy because of the consumer pulling back some of their spending? We know inflation, yes, while it is improving, still a massive headwind here for so many Americans. Where does that then, though, position you in that scenario?
Yeah, well, our retailer partners really have a tremendous amount of leverage in an outlet platform because they can control their pricing almost daily. So if they find that the customer is looking for better value or certain products, we've seen it, in the department stores and the larger specialty store chains, they flip their store on a regular basis to put the products that sell out front and move the products that might have been on the floor a little bit longer in the back of the store. Similarly, in an outlet format, they do the same with pricing. And if they feel that they need to be a little bit more promotional, they can change that cadence on a daily basis. And in so doing, put a lot of that promotion up front. And that's what the customer sees, that's what they respond to, and that'll get them more circulating throughout their store.
And so when you think about the retail square footage that you operate as well, what type of inflows into Tanger Outlet environments are you seeing from some of the largest manufacturers of both high value, high cost goods, and even on the other side, some of the kind of lower cost or even medium tier goods?
Yeah, I mean, it's mixed. So again, we'll talk about the Nashville shopping center that I'm sitting in today. It's a mix of brands from, Old Navy to Ralph Lauren. So you can get every single price point in between. The stores are filled with inventory. The inventory keeps on coming in. And I think a lot of these retailers are looking for the outlet channel to serve not only as a place to clear that excess inventory, but also as a place to meet the customers where they are. And I think that that's critically important part of the outlet shopping model these days, is that the retailers that engage in this part of our business, in this part of the retail ecosystem, are finding that there's a customer that doesn't shop other channels, and this is an opportunity for them to perhaps get a hold of a new customer and then take them up through their ecosystem.
And for those retailers, those manufacturers that are taking on real estate, how are the terms that they're asking for changing right now, especially as they're trying to navigate their own cost profile?
The outlet real estate, at least in our portfolio, we talked about it. We had our earnings call 2 weeks ago, and we talked about OCR, which is our occupancy cost ratio. And that basically what that is, that's the amount of rent that a retailer pays as a percentage of their sales. And at 9% or 9.1%, we reported last quarter, it's still the lowest in any of the bricks and mortar channels, meaning that we still have opportunity as a owner of these shopping centers to continue to push our rents. In fact, we talked about our rent spreads last quarter. being up double digits as far as renewing tenants are concerned, and almost 30% for new tenants coming into our shopping centers. Well, let's talk about the renewal tenants for a second because it's very relevant. We have 95% of our existing tenants across our platform, 12.5 million square feet, that are renewing every year. 95% of those tenants that are turning, that renew, are also voting to stay in the same space that they're in, but pay over 10% more in rent to do so. So I believe that speaks to the value of the space, particularly in our portfolio.
Stephen, is this something that's across the board, or are you seeing this maybe play out a bit differently on a region-specific basis? Because yes, the leasing activity is very high. You have seen improvement, obviously, on a year-over-year basis, but are you seeing any pockets of weakness?
I think, yeah, for sure, it'll happen on a geographic basis. We're primarily a Southeast company. We've got many of our assets reside in that part of the world. We just bought a new shopping center. We closed on it yesterday in Asheville, North Carolina. We believe in the market. So there was an existing property there, beautiful property, extremely well run, yet we believe, based on how we're managing outlet centers right now, our scale, the team that we've built, and the way we see the future of retail, which is not just retail stores, but complementary food and restaurants and experiences. I think the customer is shopping differently. We want to meet, like I said earlier, we want to meet that customer where they are. When we want to give them far more to do when they come and shop in our shopping centers. As far as areas of weakness, I think that some of the outlet centers that were built 30 or 40 years ago have been perhaps cut off by outlet centers that move in a little bit closer. Those shopping centers need a reinvention as well, and perhaps maybe need to be more localized. So I think there's a strategy for all of those properties, whether they're the strongest properties, we're going to continue to build them and add new uses. The weaker properties, again, we're going to respond to the customer that wants to shop in that marketplace, and we're going to bring that customer exactly what they're looking for there as well.
All right, Stephen Yalof, always great to get your insight. Tanger Outlets CEO. Thanks so much, Stephen.
Thanks so much for having me.